Gladstone Investment stock, ticker symbol GAIN, has gone up and down quite a lot this year. Down the line, it is trading 3% lower on the year-to-date chart. But the main reason why people love this stock is obviously the monthly dividend yielding at 7%. And looking at the 5-year chart, it is actually not looking that bad with a 62% total return, including this juicy dividend. But this stock is most of the time used as a pure dividend income stock. And it has been a while since the last time I analyzed this stock. So here we are. On the 7th of November, Gain reported earnings, where they missed on both the EPS and revenue. So we're off to a bumpy start here. Diving into the actual numbers, we see that total investment income is up 1.7% year over year. Actually, not looking too bad. However, expenses are increasing big time, over 56%. And thus the net investment income is much lower, decreasing over 41% year over year. Net realized gain is reported at 42 million, resulting in a net increase in net assets from operations of 15.4 million. Net investment income per share is reported at $0.2, down 41% year over year. So we see some mixed results here. Diving a bit more in the portfolio, we see that this has been growing at a decent number in the long run. Most recently, this number is going down, so that's definitely something to keep your eye on. It's the same with the dividends. The regular distribution is flat year over year, but up big time in the long run. Looking at the supplemental dividends, we see that this is down actually year over year. But since it is a bonus, I don't mind that much for now. Looking at the return on equity, one of the more important numbers with this company, we see that they are doing an amazing job, also versus some of the peers. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Gladstone is a 500 million market cap company. PE ratio is at 13, indicating they are undervalued. Later in this video, I will show you my 3 price targets for Gladstone stock, so make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 35 million, and in this graph we see that revenue went up in the long run. Of course, we see the impact during COVID, and most recently revenue is increasing again. The margins are going up and down quite a lot over a longer period of time. Especially the net margin is not really steady. EPS is pretty much the same story as the margins. Nothing special to add here. Companies like Gladstone tend to have fluctuating numbers. Analysis expect that EPS will decrease in the coming years, which is a bummer, of course. For the revenue, analysis expect 5 to 6% growth in the coming 2 years, and after that they expect revenue to stay flat. Return on assets is sitting at 4%, which is a decent number. Return on equity is reported at 15%, and not the 8% reported here, which is a great number. This is also one of the most important numbers for Gladstone Investment Corporation. Current ratio is at almost 0, which is not really a good sign. I prefer this number a little higher, to be honest. Right now, Gladstone has 340 million in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Gladstone has 2 million in total cash, so they can't pay down a big part of their debt. To me, this could be a potential red flag. So it is very important that free cash flow is growing, since this is used to pay down debt, of course, but also to buy back shares, pay dividends, and all other things. And here we see that free cash flow is going up and down a lot. I prefer a bit steadier pattern here, so definitely keep an eye on this number as well. Shares outstanding are increasing in the long run, which is something that I don't like in general. But companies like Gladstone issue new shares to raise capital, so I don't mind that much. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7%, which is a great number. Keep in mind that Gladstone pays a monthly dividend instead of a quarterly dividend. Annual payout is at $0.96 and payout ratio is at 98%. I prefer 50% or lower, so right now they have no cash left to invest in other areas. However, this number is also impacted by the recent quarter. I expect this number to come down again in the coming quarters. The 5-year growth rate is at 5%, which is a decent number. They have increased the dividends for 2 years in a row now, which is very nice. And if you take a look at these numbers, the dividends paid since 2014, you see that Gladstone did increase the dividends at a decent pace historically. In the recent years, somehow the supplemental dividend was added by Seeking Alpha, which dilutes the image a little bit here. In this graph, we see the expected dividends in 2025 and 2026. Of course, this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's a bit diluting with these supplemental dividends, but it is expected to be roughly the same as the past years. And overall, these dividends look really good to me. But how about the historical returns? I decided to compare Gladstone stock with the overall market, in this case the S&P 500. On the 5-year chart we see that gain return 62%. Meanwhile, the S&P 500 is at 110% return, which is quite the difference, and keep in mind this is including dividends. However, most people only focus on the dividend income with this type of stock. On the 1-year chart things look rough for Gladstone, sitting at only 11%, while the S&P 500 is sitting at 36%. On the 6-month chart we see a similar pattern. Gladstone is sitting at 5%, while the S&P 500 is winning once more with nearly 15%. On the 1-month chart it is a slightly different situation, with Gladstone having similar returns to the S&P 500. So bottom line, the S&P 500 did a better job in the long run. And in the short run it is also the better investment. But I'm quite impressed by Gladstone to be honest. So could this be the perfect time to buy the stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth, I'm filling in 4, 6 and 8%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin, I'm putting in 85, 87.5 and 90. For the free cash flow margin, I'm putting in 10, 12 and 14. For the PE ratio, I'm putting in 10, 12 and 14 as well. For the price to free cash flow, I'm putting in much lower numbers. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build on a higher margin of safety here with this type of company. Right now, Gladstone Investment stock is at $13.8. I hit analyze and we see a lot of red numbers, but I'm more focusing on the multiple earnings value. We have a low price target of $7.7. We have a mid price target of $9.8 and we have a high price target of $12.4. And to me, the mid to high price target is the most justified here. So that means that they are still overvalued at this point. And what do you think is the most justified price target here? Let me know in the comments down below. My final conclusion on Gladstone Investment Corporation is that it is a risky investment. It's a smaller company that doesn't has a long proven track record. Most fundamentals look pretty decent, but it is a little harder to evaluate this company to be honest. From a dividend point of view, I think it is really interesting with a high yield, but also a lot of supplemental dividends, and of course the monthly payouts. From a value point of view, things don't look that great. For now, I'm adding them to the watch list, and I will add shares whenever the stock price goes down a lot, just to have a little extra margin of safety. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.